Greetings. My name is Frederick Kozak. I am the president of Appia Rare Earths and Uranium Corp. We are a Canadian-based critical materials company. We have assets in northern Saskatchewan in the Athabasca Basin, which are exposed to both rare earth elements and uranium, as well as a historic uranium deposit in Elliot Lake in Ontario. Now, the one thing I should note about northern Saskatchewan is it is one of the best mining jurisdictions in Canada and has been consistently ranked as a very highly ranked mining jurisdiction. But the rare earths that Appia have found to date appear to be one of the richest rare earths occurrences globally, with 16.65% total rare earth oxides.
Lovely to meet you, Frederick. I think we've been trying to do this for a while. We've certainly been keen to for some time. So I appreciate you coming on this show. We've not met or spoken before as well. So I think if you don't mind today, what I'd like to do is just get a broad understanding of what Appia is trying to do. Because I noticed things like name change during the year. Also, there's going to shift to a bit more prominence of the rare earths component of the story. I know you've been finding it, but you want people to start taking notice of it too. So can we just start with when this change in mentality or, in terms of the story happened and why?
Sure. Well, listen, Appia started out more as a uranium-focused company with the assets in Ontario. And in the northern Athabasca Basin of Saskatchewan, it's prone for uranium. There are a lot of historic uranium mines. If you go to the eastern basin, there's a lot of uranium development underway. Some of the majors in the world produce from there. Now, the rare earths were found. The way they occur in nature is not directly associated with uranium, but you do have them in a similar province. And this is all Canadian shield, hard rock, so it is prone for the rare earths. When they were initially discovered on the Elliot Lake project by the exploration team, it was a program that commenced slowly, but given the importance and the increasing importance in electric vehicles, clean energy, and now critical materials, a decision was taken to spend more time and money on trying to delineate and explore for the rare earths, in addition to the exploration of uranium that still continues within Appia.
So how do you do that as a junior with limited cash? I know you've raised money a couple of times this year, which is going to allow you to, but you better tell us. So why did you raise the money a couple of times this year? What are you trying to do with that money?
Well, thank you for bringing that up. We've raised money a couple of times this year, and we have a great vehicle in Canada. It's called flow-through shares, which allows you to flow through the tax benefits to your investors. We also did some flow-throughs at the end of last year as well. So we started this year with a planned $5 million program. We had more than enough cash on the balance sheet to fund it. But we also took the opportunity in the spring to raise some flow-through as well as some hard equity dollars. And that's given us enough money to complete this year's program, which was expanded to, we were going to drill 5,000 meters. Now we're probably going to drill at least 7,500. It could be as many as 10,000 meters of diamond drill core. And then the opportunity to raise some more money this fall, again, into the flow-through funds, gives us a really strong balance sheet as we look into this year's program and into starting next year's drilling program. One of the things we did this summer with the additional capital that we had is we built an all-weather camp, so we could literally work there throughout the winter, although I'm not sure northern Saskatchewan you would want to be there in the depths of winter, but we have the capacity to do that. So it was all about expanding our balance sheet, having a strong balance sheet. As you noted, being a junior, you just never know when you can raise money.
Well, these are clues into the way that the management team think. Obviously, uranium's had a couple of bumps along the way in the last 12 months, right? It's had a good year generally across the board. Certainly, some of the Athabasca players have seen that, and most of the Africa assets too. So you've used that to raise some capital, flow through or otherwise, but you're not necessarily going to spend it chasing the uranium. You're going after rare earths too. And this is the bit that kind of, people need to try and understand, or I need to try and understand, which is small junior with a little bit of money. You're going after two quite distinct markets, energy and battery metals, and certainly automotive, let's say. I'm not quite sure what you're going to be producing. You've got very different audiences there. Rare earths traditionally quite hard. Ex-China projects don't tend to do well. So again, what gave you the confidence to move into that space?
Great question, because when it comes right down to it, it's all about your being the lowest cost producer. Now, one of the things that is really critical about Appia is that you've seen some of the pictures in our presentations. So our rare earths, which are coming from monazite, have a much higher degree of the critical rare earth elements, including neodymium and praseodymium, the permanent magnet materials. So that makes it first and foremost very, very attractive, because as we know, the world right now can barely supply its current demand, never mind the 5x that they're talking about in the next 10 years. But rare earths are not all that rare. They are everywhere in the world. However, the critical thing is that the cost of extraction. We've got rare earths that are on surface in massive occurrences. Like, I've stood on the boulders and they're too long to measure. Well, I mean, not too long to measure. Obviously, you measure them, but they're too long to even describe, versus how you usually find monazite, if it's not a monazite sand, is very fine-grained monazite crystals, for lack of a better word, in the base material. So we've got a naturally concentrated monazite occurrence that we're now delineating at Alces Lake. Our program this year is on the original discovery, what we call the WRCB zone, which is an amalgam of 4 different names. We're going to drill at least probably on the order of just over 5,000 meters on that. That's more than all the drilling that's been drilled on Alces Lake in the previous 4 years combined. So we've got a very near surface, looks like a very high concentration, high quality rare earth deposit or discovery. And then we are looking at the ability to, in theory, extract it very economically and become one of the low-cost producers.
But it's the theory bit, which is that's the bit that people need to focus on, because from where you are today to the delivering the in theory bit is you've got a lot of work to do. So again, it comes back to the money. Where do you deploy your money? Where do you see value in your company's assets today? Because you sat around for quite a while on the uranium assets, like all uranium juniors. Market wasn't really doing much for you until, I guess, the end of 2020. We had a little bump, and then again a couple of little bumps this year. You've decided you're going to park that up and get focused on trying to prove that theory of scale, and you've got grade scale, which will answer the economic question. Is that where the money's going, or are you going to spread yourself thin? That's the other sort of danger here.
Well, we won't spread ourselves thinly. I would just highlight that the Elliot Lake project in Ontario has a 43101 resource report on it. So it is from a proven historic mine. And, the obvious is that uranium prices have not supported continuing operations there. On the uranium side in northern Saskatchewan, though, we have been drilling over the years, small programs, and we just finished some geophysics. And we finished some radiometrics. Now we're doing a VTEM survey over a couple of the projects. And these are near surface, high quality, high grade, which would be consistent with what, the idea is you get that stuff out of the ground economically. The reason, obviously, for spending the bulk of our time on Alsace Lake is that it appears to be such a high quality occurrence. And the question is, drilling, we're drilling towards getting a 43-101 report for this year out of this year's program. And then the next step will be, whether it be a PEA or whether more drilling is required. It's a little bit early, but we have a very good understanding of the geology, and we are testing the model and just basically figuring out how much is the resource going to be there.
Okay, so the name is now Appia Rare Earths and Uranium Company, right? Not Appia Uranium and Rare Earths. So again, is that a clue about the focus of the company? In which case, I've got to ask, would you look at some point to spin out or get rid or sell or whatever the uranium component because you don't see the potential that you do with the rare earths?
Well, that's always when you have companies that have a set of diverse assets like that, there is always the question as to, is the market giving you value for your uranium and giving you the value for your rare earths assets? The question then becomes, does it make sense to shareholders to go, okay, shareholders, maybe it's better that you take the company and send it in two different directions, raise money to accelerate the uranium while the rare earths are being driven forward as well. One of the things about the rare earths is, that the Saskatchewan Research Council in Saskatchewan is building Canada's first rare earths processing facility. So it'll be 3,000 tons per year, at least initially. There is an opportunity for us, literally 1,000 kilometers away from Saskatoon, to be one of the feed sources for their facility, which again is part of the development scenario, in that if you've got a processing facility that close to your extraction point, then you can drive the economics, because now all of a sudden our economics of in-field development have got that much better.
Right. So we talk, I use the phrase ex-China. So and you're an ex-analyst who knows a lot about rare earths. So pick me up if I get anything wrong here. But for a long time, China, and I know you've got Jack Lifton on the board too. It's very intimidating. So we've got, sorry, as an advisor, I should say, it's anything outside of China was always going to have their ability to control their own margins, their own destiny, controlled by what China decided to do anywhere along that food chain, right? So again, it comes back to that question of earlier. What gives you the confidence that you can make it? Despite, I get the Saskatoon facility, and that's great that Canada's funding that, but you need a whole bunch more moving parts, and you need to know where you fit into that sort of chain of players. So what is giving you the confidence that you can do this, that Canada is going to allow you to be successful?
Well, Canada and the US have signed off on a critical materials agreement, looking to build the North American supply chain. The 49th parallel in this case may or may not be imaginary. But again, it comes down to the big question when you say ex-China. The world has recognized the fact that China is not necessarily the enemy, but they're certainly not friendly in some regards. So there is, at all levels, both federally and provincially in Canada, an interest in developing that critical materials. Both countries, Canada and the US, have a list of critical materials, which is 30 odd items, of which they've just lumped rare earths in as one item, even though there's 17 of them. And there is a drive to go ahead to have this as one of the Canadian staples. And you see our at the recent climate change and the G20 conference, the Prime Minister of Canada, he's standing up and taking a lead in terms of the clean energy drive, of which eliminating hydrocarbons emissions is part and parcel of that. The drive to go to, no pun intended, electric vehicles and wind turbines and, even solar cells and that sort of thing, which requires all of these critical materials. So if we have it, they will come. And so far, it looks like we have something very, very significant, to be determined just how big. But yeah, we think there is a drive, at least in North America. And then, of course, North America is talking with the EU, and everybody's getting on the same page. The fact that Energy Fuels is exporting a rare earth oxide to Estonia, to the Neo Performance Materials refinery, is, it is just a very thin chain in that, but I think it represents what may be happening.
So, okay, that's interesting. So Canada and the USA working together on the kind of critical minerals list. We're all friends here around the table, but does that mean that you have got the option of using something like the White Mesa Mill with Energy Fuels, or are you? Because I'm trying to work out how Canadian is this, or is it just North American? In which case, I guess there's a lot more options on the table for you. NdPr, yeah, great. It's in huge demand for North American automotive manufacturers. But at what point do you start having to work out how you plug yourself into that system, or are you just selling in the open market and it's a case of first come, first served, and you're not really in control?
Yeah, what I think is going to happen, and that's a very good question. I mean, whether it is a Canadian silo and an American silo, that's how things happen in a lot of instances. But, at the outset, we have something that's very valuable to anybody who makes anything with a permanent magnet. And you could, you see the headlines all the time about how the end users, the automotive manufacturers, are now starting to look at how are they going to integrate their supply chain. In essence, let's say, I'm trying to think of who I saw in the headlines recently, but let's say Mercedes is going to come knocking on Energy Fuels' door to say, okay, well, you guys have a supply of X, you're doing the monazite sand. We want to hook up with you. We want to tie up a portion of your supply so that we have a guarantee. And how does Appia fit into that? Well, we have to first and foremost, we have to prove up the size of what we have. And are we going to strictly plug into Saskatchewan Research Council's facility and then sell out into the open market, or do we align ourselves with somebody else? That is to be determined, but there's the option of doing it both ways. Whatever makes strategic sense from our shareholders' point of view, because as you know, we're a public company, we have to do what's best for our shareholders and their value, and then being also part of the global solution of clean energy, etc.
Right. Okay. So I want to move it away from theory to reality. So I like the fact that there's options, because it means there's competitive tension. It means you don't get squeezed on margin by only having one option. Great. Let's go back to this. As you correctly said, you've got to show that you've got scale here. So you've got an amount of money. It's not huge. So how do you go about doing that over the next 12 months or so?
Well, with the drilling program that we have underway, we're not finished yet, and we have a lot of samples in for testing. And as we get the assays and we evaluate them and we plug them into our geologic model to figure out what have we got, where are we going with it, that will be the part that then generates the NI 43-101 report. So that will be a formal resource report of some sort that will give us the idea of what the independent third-party consultancy with our Alsace Lake project. The next step then is to go, okay, well, if they've defined this, then can we expand it? Do we need to expand it, or can we go straight to a preliminary economic analysis of some sort? So right now it probably means we may need to do some more drilling next year. But we have enough. Once we close this financing, we will have enough money on our balance sheet to do that. We will be funded for a program next year which could in fact be similar to the size of program we did this year. The program this year, I mean, we put $1 million into our new camp on site, so that's something we don't have to spend money on. And you put more money into the ground. But out of this year's program, the analysis will tell us what does next year look like. And do you go in and are you putting in holes every 5 meters as a delineation of how you're going to develop it, or do you need to find some more resource within the properties?
Right, and with the money I know you haven't announced the closing yet, but you've talked about upsizing it to $7 million. But is there an expectation from the people who invested in that private placement that you're going to be spending the money purely on the rare earths component, or has there been some allocation towards the uranium?
Well, we haven't really had that as a conversation. We are clear about that we were going to do some uranium exploration this year, and we're flying the geophysics right now. And typically, everybody, as we all know, geophysics leads to potential for drilling. So there is the expectation that we'll probably do some drilling on the uranium properties, but that's to be determined once we evaluate and analyze and machinate on the geophysical data.
Right. So, yeah, the geophysics leads to drilling, but it identifies targets, and targets are just targets, anomalies, yes. Targets, right? They're not discoveries yet. So I'm just wondering, in terms of having sort of been through a few years of just, static market for uranium, whether the board is eager to get going and, create some headlines, capture some attention, because you're sitting at, what's your market cap today?
We're 75 cents Canadian, which would give us just over 100 million, I think.
Right. Okay.
Simple math in my head. I'm sorry.
Okay. So it's all. I mean, it's better than it was 12 months ago. It's better than it definitely was 24 months ago. So it's all good news. But at the same time, you got some long-suffering shareholders expecting you to try or hoping that you'll be able to take advantage of this market or the uranium market, and then you've kind of jinked left off to rare earths because you think, well, actually, I think we can get more value over here. So has that caused some consternation in the marketplace? That people are like, well, what are they playing at? What sort of questions have you been having to answer at shareholder meetings or questions sent in?
Well, I think we've had a lot of positive response to our name change execution. It was actually approved at our shareholders meeting earlier this year. And I think a lot of shareholders have looked at Appia over the years. Yes, I wouldn't call them long suffering. I think they're all pretty happy right now, especially if some of them took some money out a few months ago to $1.20 Canadian. But they recognize you're right, we have those two distinct asset bases, and it is, it may be, how do we unlock the value in terms of the uranium assets versus the rare earths? Right now we're bifurcated, but the focus is on the rare earths processing facility, or focuses on the rare earths delineation to see if we can't be one of the feedstocks for Saskatoon, for the processing facility in Saskatoon. That's kind of a no-brainer. And then, given the proximity of the Athabasca Basin uranium properties to the existing facilities up there, then there is, it's still two parallel paths. But
it's kind of one of those difficult things. I think Athabasca, known for high grade uranium, all good news. Also known for long permitting process and trouble with First Nations and things like that too. So it's not a quick win. The great projects, great grades, and very efficient drilling, right? So all good stuff, but comes with problems. Is that part of the decision making that you, in terms of just saying, well, look, do you know what? I think the quicker win, the better win, is this rare earth stuff. because this whole, the magnet side of the business, it's in huge demand, 5x growth over the next. Well, you said 10 years. I think it's probably shorter than that. The numbers getting bigger and bigger every week.
I think, but.
Yeah. So it's all it's exceptional market, right? So is that again? It's just like you're saying, we've got to place our bets somewhere. So the thing I'm trying to dig you out about is, come on, let's be honest. You've got to focus on something. You've got to get known for something. Doing two different distinct markets, trying to operate in two distinct markets, it's going to be tough. It's going to be more expensive, surely. So the quick win for you and get a bunch of cash in, surely, is offloading the uranium.
Yeah, and that is a decision that has obviously not been taken. I mean, a public company, obviously, you have to disclose everything. It is, you look at it from what we talked about before, and that is, at what point in time do you say, okay, shareholders, we see a better value for you as two separate entities? Particularly in the uranium space right now, where things are hot, you could do that. We haven't done anything on that because we have been focused on the rare earth space, absolutely, and we are working on the uranium, but it does take more time and all of those issues. In terms of northern Saskatchewan, we're working closely with all the First Nations and treaty and non-treaty, so the Métis as well. So we have great dialogue with them. We're engaging. We're very supportive of them, and coming to all of having them part of the process. So it's just a matter of what makes most sense for our shareholders.
But you can't make that decision. You can't make that decision without actually, because I'm curious. You must be curious about, what do you think you could get for them? So you're going to have to go through a process and work out, well, how do you value that bit of the business? And that's got to be a way. You're ex-analyst. You're not going to do the CEO over undervalued thing. You want to put an actual number on it, DCF or otherwise, and say, I think this would be a reasonable price to get from the market, given where we think uranium's going. For someone, leave enough on the table for someone to capture value further down the line, but for us to capture enough value today to get this rather exciting, quite sexy, rare earth thing going, and going meaningfully. So, is there a process is there a point at which you're going to make a decision about instigating a process to get a value on the uranium bet?
Great question. Thinking, we've all seen bubbles in the market, and the question is, are we just opportunistically looking at spinning those assets out, or is this real for the uranium space, in that it makes sense to do that, as opposed to just creating a new uranium company that is good for a couple of years and then the market says, yeah, we don't like uranium anymore and it's stranded, versus keeping those assets within Appia. I mean, the first thing we could do would be to take our existing 43-101 report on the Elliot Lake project, update it for current costs, current pricing, and go, here's the value of Elliot Lake to our shareholders, and is it accurately reflected in our market cap and our the market's estimation of our value? That's always, I know as an ex-analyst, I'm undervalued. Of course I am. But when does it make sense that you have a set of assets that are significantly not recognized by the market, that it makes sense to do that? And it's twofold. It is, as I say, it's what is the long-term view of uranium and uranium exploration? As the world works toward net zero, it's a big problem because the sun doesn't always shine, the wind doesn't always blow. We've seen this all around the world recently. In fact, you can have tidal power, or you can have hydroelectric, but they're having a drought in the western U.S. and their reservoirs are down. Well, not just the western U.S., but their reservoirs are way down. So now all of a sudden your clean energy resources are strained. So to get to net zero, I know uranium and nuclear power has not been in favor for many, many, many years. the world's got to adopt and adapt to more nuclear power, to clean power, to, there's.
Yeah, no. We talk about it every week on our weekly energy show. Nuclear is green now. Wasn't always thus. We've got lots of other shows where we talk about batteries and how renewables feed into it, and where there's money to be made and where there's money to be lost. We talk about it weekly. It's a big topic, but I want to talk about you though. The question is about you guys and the timing of when you start making decisions about what you do with it. Whether you just let it just sit back there, because if you could update it 43.1 reasonably quickly, but you need to throw some cash at it. But you decided not to. So that tells us something. So your focus on rare earths tells us something. So it's just a fair question. Lots of people ask it and going, what's the intent here going forward?
Well, we are paying attention. There are things obviously we can't talk about without disclosing them to the market. So we're paying attention. Your point is not lost on me and on us as a company and as a management team and board. To be determined based on all of the things that we've talked about.
Okay, fair enough. So in terms of moving forward, you've got money, and you've got to close this private placement. You'll make a decision about how much of that goes in the ground, but it is going to be predominantly rare earths focused. You do understand. I know you understand the rare earths market extremely well, as does Jack, who's advising you. So it's a question of, we should expect to see, as an investor, from you more movements on the rare earths front, not just drilling, but otherwise, in terms of giving clear guidance about how you intend to insert yourself into that space.
That's correct, yeah. And again, we have the capacity to do some drilling on the uranium projects this winter as well. So not to polarize it, but there's still the capacity there.